Advanced Financial Wellness for a safer and more secure retirement and a brighter financial future. My name is John Barker, and my varied background gives me a unique perspective on long-term planning for retirement and other financial goals. In our seminar, we will utilize sage advice such as Warren Buffett's 2 rules for investing. Rule number 1, don't lose money. Rule number 2, see rule number 1. Paul Tudor Jones, whereby risk control is the number 1 single most important focus that I have every day walking in. Compound interest is such a powerful tool that Albert Einstein once called it the most important invention in all human history. Later, we will show you an enhancement that gives this even more importance in your long-term planning. Asset allocation is everything. Which is most important to you? How much you can accumulate or how much you ultimately can spend and use? You may have a goal to accumulate $1 million, and with the current tools you are aware of, you may devise a program that has moderate to high financial risk, moderate to high retirement risk, with the possibility of $600,000 to $800,000 or more to actually use in your retirement. With some of the strategies and tools you will learn in this seminar, you may devise a program to accumulate $800,000, has little or no financial risk, and low retirement risk, with the possibility of $1.5 million to $2 million or more to actually use in your retirement. Our seminar teaches balanced planning. Too many people make the mistake of only focusing on accumulating the most money possible without taking into account the 8 major risk factors that can derail the retirement plan. Balanced planning could save them tens of thousands to hundreds of thousands of dollars during retirement. You will learn a number of financial strategies and money management tools to help you accumulate money for future needs such as college funding and retirement, all while learning how to keep as much of it as possible. You will learn about programs to help you save on current costs you have now, how to lower the income taxes you currently pay, ways to find more money to put away, the difference between average rate of return versus actual rate of return and how that can impact your financial future. A new take on dollar cost averaging to help lower the risk of investment loss. Learn how Albert Einstein would be impressed with this strategy to earn compound interest on borrowed money. You will learn how to affect every part of the equations used to invest for retirement to better work in your favor, including concepts like the Personal Pension Plus from WMC Business Services, LLC. Before you say all of this sounds too good to be true, I have been teaching most of these strategies to my clients since 1987, and I will share with you the IRS code that makes all of this possible. I will also share a little used IRS formula that, instead of taking your income needs from fully taxable money, allows you to take your retirement income from a non-taxable source, while moving some of the fully taxable money to a non-taxable source for a specified period of time based on this IRS formula. With this strategy, there could be no taxable income or little taxable income during this specified time period. Then later, when all monies are used for your retirement income, the overall tax bill can be greatly reduced to allow you to have more money to spend during your retirement. Here are some ways that I have helped clients in the past. I made 4 recommendations to a client that after 9 months freed up $6,200 per month in income to invest for retirement. I recommended a simple strategy to a couple in Los Angeles that saved them $6,500 per year in income taxes. I was unable to help another client who made a decision on asset allocation 15 years prior to me meeting with him. The decision cost him an extra $35,000 in income taxes when he sold his business. He had to pay the extra $35,000 in income taxes for 10 years at a cost of $350,000 in extra taxes that better knowledge and planning could have avoided. Another client at age 56 did not address 2 basic risks which cost him over $300,000 before he could retire. Wealth accumulation only without planning for the risks to preserve the wealth has been and will continue to be financial suicide for many. It does not matter if you are a millennial, a Gen X or a Gen Y, or a baby boomer, or a parent planning early for their children's future. An individual or a couple, a professional, a business owner, and no matter what your current level of income is, everyone needs to know about these financial strategies and money management tools. I encourage you to come to the seminar and invest in yourself and your family. so you and your family can have the retirement and financial future you have been dreaming of. We will donate a minimum of 50% of the proceeds from this seminar to a nonprofit to help with their efforts in our communities. See the event page to see which nonprofit we are supporting. If you have any questions or would like to learn more, contact our office by email at info@wmcbusinessservices.com or by phone at 360-339-7801.